Welcome to the Gold and Silver Report for December 3rd, 2025. My name is Ron Guth, and I will be your host today as we examine, as we always do, what is happening in the gold and silver markets. Today, December 3rd, gold closed at $4,202 per ounce, down just barely from yesterday's close, but more importantly, down for the second day in a row. Silver rose a mere 3 cents to a new record high of $58.43. As we pointed out in our first two videos, you will find proponents on both sides of the pricing issue for gold and silver. Those who can explain why they went down, and those who can explain why they went up. For those who are more concerned with future pricing, concrete developments are what are needed. As such, we look at as many headlines as possible to suss out what is really happening. If you're guessing about what's going to happen in the future, you're speculating. You may as well put all your money on red at the roulette table. You want to make your buying and selling decisions based on good, concrete information. So, what do the pundits have to say about today's pricing of gold and silver? Niels Christensen of Kitco News, who we've cited before, believes that a weak jobs report by ADP favors gold market bulls. Christensen cites, quote, some analysts, end quote, who believe that weak unemployment data, which was in the ADP report, increases the odds that the Federal Reserve will cut interest rates. We've talked before about how a Fed cut helps gold, and we're all in favor of that, but we'll see next week when the Fed meets if they agree with us. Again, it's just a guess. Ernest Hoffman, also of Kitco News, suggested a linkage between gold prices and the Institute for Supply Management Services Purchasing Managers Index, noting that business activity improved and price pressures eased. Apparently, if the services sector improves, so might the price of gold. But wait, if the economy is improving, shouldn't the price of gold be going down? Mike McGlone, the senior marketing strategist at Bloomberg Intelligence, who is cited in another article by Christensen, believes silver could go to $75 per ounce or drop to $40 an ounce. Not much help there. Gary Wagner of the Gold Forecast targets a gold to silver ratio of 65 to 1. Right now it's sitting around 73 to 1. Previously we discussed the gold to silver ratio, and we believe that gold and silver have become so decoupled over the years that the current ratios are normative and not predictive. In other words, ratios only suggest that gold is historically overpriced or that silver is underpriced relative to each other, without taking into consideration other market factors such as the important things like supply and demand. We believe that gold and silver are two completely different animals and should be treated separately. Ernest Hoffman wrote another article today about how central banks were considering increasing their gold stocks. The reference to central bank purchases of 53 tons of gold in October seems like old news to us, but it appears that at least one country, Serbia, will be buyers of gold in the near term, and that is positive news for gold. Jeremy Safran of Kitco News interviewed Phillips Baker, an advisor in the silver mining sector, who noted that physical silver is in tremendous demand, especially in India, where 55% of their silver purchases are for industrial use. Baker notes that the inability of silver mines to meet the insatiable world demand can only mean that silver will remain strong or rise in the future. The mines simply are unable to meet demand, at least in the near term, and it could be as long as 5 years out before they are able to meet the current demand. As you can see, we've added to our list of things that impact gold and silver prices. Let us know in the comments below what you think will have the biggest impact on gold and silver. Are you a buyer or a seller at current prices? Thank you for joining us today, and we hope to see you in future podcasts. Please consider helping us grow the channel by subscribing, leaving a like, and a comment.